Happy Tuesday, Maverick Currency traders. This is Rob Reinhold. This is the Currency Recap, and let's get into it. In this session, we're going to go over the news of the day. We're going to take a look at the broad markets, commodities. Then we look at everything, score at +3 to -3, and that's where we go hunt. We pair the strongest against the weakest.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, let's jump into the news of the day. News of the day, we first got the Swiss CPI report. It was expected to come in at -0.1. It came in as expected. Guess what? Swiss franc was the worst currency of the day, but barely down on the day. We had a very, very low volatility day today. We then got the Canadian IV PMI, and it missed at 54.7. It's supposed to come in about 56. But look, any number above 50 is growth. This is still a good number. So again, Canadian dollar was basically flat for the day. And then we got the US Services PMI, and it jumped. It beat expectations, came in at 54.1. And the dollar was actually the strongest currency of the day. But I don't want to get anyone too excited because look at these numbers. I always talk about when we look at these numbers, a good day is where we have multiple currencies up or down more than 1%. Not only do we not have up or down more than 1%, we don't even have up or down 1/3%. The best trade you could have made today was dollar Swiss franc, and you could have made 0.6%. I like to look for at least a 1% move, or it's just not worth it. I mean, look at everything else. Dead. Absolutely dead. So I want everyone to remember our saying at Maverick. Trade the market in front of you. Not the market you want it to be, not the market you think it should be, not the market you're hoping it's going to be, the market in front of you. And right now, this is not a tradable market. Anyone out there trading actively is very highly likely to get chopped up in this environment. That being said, we had some pretty good volatility everywhere else. We had the S&P and the world market down over 1%. When we see markets like this move more than 1%, we typically get the volatility into the Forex market. We did not see that. Crypto got crushed today. We'll take a look at a couple charts on crypto. And then gold and oil went higher in spite of the dollar going higher as well. When we take a look at which crypto was the worst, they were all bad. But you can see that Litecoin was the worst, Bitcoin not as bad. Look, that's just a change in volatility. We know that Bitcoin is less volatile than the other coins. That's just the way it works. That's the fact. So even though Bitcoin was down 5%, I'm not going to jump up and down saying, ooh, Bitcoin is showing relative strength. It's basically just a lower volatility trade than like a Litecoin. Across the board, they were all moving lower. Let's take a look at where we are in equities on a chart. Over the weekend in the currency room, we were at a -0.5 to a -1. And the things I pointed out here was that we had just made a new all-time high, all the way up here at 6,100, and then we pulled back, huge pullback, and broke below the 50-day moving average. We rallied up, but put in a lower high, but we did not put in a lower low. We found this big band of support right here in equities, somewhere around the 58.30 to 58.60 area. Somewhere in here, some pretty good support. But we also got a top trend line, and you can see we bounced right up to that trend line, hit our head on it, and went down. So where does that leave us? It leaves us in the same place we were when we did the trading room last week, the currency room on the weekend. We're in no man's land. This is no man's land. This is zero. This is where your score on the market is +0.5, -0.5, 0. And look, there's two types of zeros. There's zero where it's listless, where it hasn't gone anywhere and there isn't really any movement. Or a zero can simply be the stop over between +3 and -3. I put odds on it last weekend. I said, I think there's a 60% chance we drop lower and a 40% chance we go higher. I'm going to go ahead and up that now to more like a 65-70% chance. I think this market is setting up to make a move lower, and that should bode well for volatility. I'm looking to trade Forex while the cryptos are falling apart. So I'm really looking to trade Forex, but I need volatility to get in there. And I don't think we get any volatility until we see some sort of panic, which I think we get if we break below this 5830 in the S&P. And if we do that, it's all the way down here. This is about a 3.5% drop from here. I think that's what we're looking at. And when it does break, I really want to be looking at what is the best risk-off currency at this moment. Let's jump into the calendar for the next 24 hours. And the thing I do want to point out is that the equity markets in the United States are going to be closed on Thursday in observance of Jimmy Carter's memorial. So everything that was on Thursday got pushed to either Friday or up. What do we get? We get tonight, we get CPI out of Australia. Australia has been weak. If this number comes in weak, boy, the RBA is definitely going to be moving to a rate cutting regime. The market's already priced it in, but I think it's still going to put some pressure on the Aussie. Tomorrow we do have ADP in the US, and we also have the FOMC minutes. I don't think that's going to be as important. I think that everyone is looking forward to Friday's employment report out of both the US and the Canadian dollar. So if you think about how this is setting up, we had a big down day today. The most common candle after a big up day or a down day is a Harami pattern. A Harami pattern will happen in the bottom third of that candle. So I really think that's most likely we're going to get a candle. It could be red, it could be green, it could be kind of down here a little bit lower. But I think that's where we're going to get. The markets close on Thursday, and then with a Harami candle, you get the big move, you get the Harami, and then you either get the extension down or you get a rebound. Most of the time, and it is the move down, but it can always be the move up. Friday is looking to be a big day, and I think if you're looking at being really selective on when the best time to trade is, it's going to be Friday. I think there's a lot of energy getting built up for when that report comes out. I think there's going to be a big move. So I personally am not too excited about trading over the next 24 to 48 hours. I'm really looking at Friday as my next good trading opportunity. Because of that, I'm not going to waste a lot of time here looking at currencies, but let's go take a look at a chart or two. First chart I want to take a look at is Bitcoin. So look at it on a daily chart. I talked about how we are basing. And if you remember last weekend in the currency room, I said I needed to break out of this 100,000. I needed to break out, pull back, hold 100,000, and then bounce. Take a look at the price action we got. That is not what happened. We broke out. We did not hold. Again, break out, hold 100,000, rebound. That was the only way I was going to be interested in Bitcoin. And you can see this is a bad candle. It's not a horrible candle, but it's telling me, hey, you know what? Downside is 92,000. 92,000 is likely where this is going. Now, am I interested in buying it around 92,000? Yes, I'll take a look at it. If I can see some nice bottoming action there, if I see the equity markets bottoming out, that could be a good entry point. But that, again, that is at least 4, 5, 6 days away. So I'm just not looking at it right here, right now. Let's take a look at risk off. So we have 3 currencies that if this market breaks apart, which is where I'm building my trade, we're either looking at being long yen, long dollar, or long Swiss franc. That's really the question, is which one do we want to be looking at? I can't say that I love yen here, but yen is holding support. We are holding support here, but it's not my favorite. We have mostly bearish technical indicators. EMA moving lower, RSI moving lower. Come over here to the dollar, and you know what? I don't want to like the dollar. I really want to dislike the dollar, but it's the only one showing bullish price action. Come to the Swiss franc, and again, we're seeing bearish price action. When I take a look at these 3, it tells me that dollar is still the place to be on the long side. The one thing I was looking at this week, if you remember back to the currency room, I said, are the European currencies going to bounce? You can see they took a bounce for the first couple of days. We took a pause today. They're still in the process of bouncing, but as you can see here at this point, they're all neutral. They're absolutely all neutral. Aussie Kiwi are still looking like the best shorts. They're having little bounces here, but these bounces very tepid, and look at these long upper shadows. Long upper shadows tell me they don't want to hold gains. If any selling comes into this market, we likely are going to see a push lower here. But this is the current velocity score, and remember, anything between -1 and +1, we say we are not looking to trade. That leaves us long dollar, but we have to be long against something, and it doesn't exist. If you can be short cryptos, we can't in our accounts. So this is why I am simply just looking to be on the sideline. So there will be no looking at trades today. Let's go ahead and wrap this up. I do not expect much movement. I need to see volatility come back into the Forex market. I think that's going to happen Friday. I am absolutely ready to go on Friday after the employment report. That's the market roundup. Thanks for joining me. Bye.